This is not just another market update. The US dollar is at a record high, while the Chinese yuan is struggling to keep up. And in the middle of all that storm, the Southeast Asian currencies could struggle in 2025. It sounds like chaos, but with all the chaos, opportunities present. So here's the deal. Trump's second term is just about to kick off, and it's already sending shockwaves through the global markets. The US dollar is surging like never before. The yuan is struggling to keep its footing. And currencies in Southeast Asia, once known for their resilience, are now facing the toughest challenges in years. What does this all mean for you? How do you protect your wealth, spot the right opportunities, and even thrive in this uncertainty? Stick with me because I'm about to break it all down for you. Alright, let's start with the big picture. Trump is back in the White House, and his policies are already making waves in the currency markets. Here's the ironic part. Even though Trump says he wants a weaker US dollar, his inflationary policies, like tax cuts and more tariffs, are going to do the exact opposite. Since his re-election, the US dollar, the dollar index, has rocketed, jumping from 100 in October of 2024 to 108 by December. That's an 8% surge in just 3 months. Why? Investors are betting that inflationary pressures will slow down the Fed Reserve's plans for rate cuts. The Singapore dollar is a good example. It weakened significantly against the US dollar, dropping from 1.28 to 1.36 in the same period. The Fed Reserve, by the way, has already scaled back on its rate cut plans for 2025, announcing only 2 cuts instead of 4. Again, inflation is still above 2.7%. Chair Powell isn't rushing to loosen monetary policy, and that's what's driving the dollar higher. And then there's China. The Chinese yuan is under massive pressure. The economy is struggling with sluggish domestic consumption, a property market crisis, and deflation. The yuan is sitting at 7.3 per dollar, and I think it could slide further, possibly down to 7.6 by the third quarter in 2025. And if Trump does ramp up his tariffs again, we could even see it test 8. But why does all this matter? A weak Chinese yuan triggers competitive devaluations in Southeast Asia, impacting currencies like the Malaysian ringgit and the Thai baht. Remember back in 2015, when the yuan dropped, it created a ripple effect, and it hit all across Asia. 2025 might be a deja vu. Dig a little deeper into why this is all happening. Trump's policies are inflationary, plain and simple. Tariffs are back, with rates averaging 19%, and they're targeting big sectors like electronics and semiconductors. On top of that, his administration extended corporate tax cuts, pulling capital into US equities and bonds. Higher inflation expectations mean higher long-term treasury yields. Right now, the 10-year yield is holding above 4%, making the US dollar extremely attractive for global investors. And with fewer rate cuts planned for 2025, the dollar's strength doesn't look like it's going to be fading anytime soon. On the flip side, China is facing headwinds. Domestic consumption is weak. The property sector's debt restructuring is dragging on, and they're stuck in a deflationary environment. To counter this, China's central bank is adopting a more relaxed monetary policy, but that only makes the yuan weaker. If we see the Chinese yuan hit 8 against the dollar, other Asian currencies might follow suit. Now let's not forget that Southeast Asia is deeply connected to China. When China sneezes, the region catches a cold. The Malaysian ringgit, the Thai baht, and even the Singapore dollar could face more pressures to the downside. In Southeast Asia, things are already starting to crack. The Malaysian ringgit fell from 4.5 to 4.7 against the US dollar in Q4 2024. The Thai baht, despite a rebound in tourism, dropped from 35 to 37.5. And the Indonesian rupiah is inching towards the 16,000 rupiah mark. Capital is flowing out of these emerging markets and back into the US, thanks to those higher yields. At the same time, Trump's tariffs indirectly hurt ASEAN economies, since many of them are tied to China's supply chains. Now, despite these challenges, there are reasons to remain cautiously optimistic about ASEAN's resilience. The region continues to benefit from robust foreign direct investment flows from both the US and China. They also see strong intra-regional trade and a growing domestic consumption base. Additionally, ASEAN central banks are armed with record levels of foreign reserve, which can be used to deploy to manage currency volatility. Tourism is another bright spot, with now borders fully opened after COVID and regional travel on the rise. Tourism revenues could provide some buffer against external pressures. Now, governments across ASEAN also have the fiscal and monetary policy tools to mitigate the impact of external shocks, reinforcing the region's reputation as a relative safe haven. However, these measures can only do so much in the face of a strengthening dollar and continued global uncertainties. Alright, let's talk strategy. How can you protect yourself and profit in this environment? The first thing to think about is to hedge against the US dollar strength. Do you have assets in currencies like the Singapore dollar or the Thai baht? Think about hedging your exposure. Tools like forward contracts or options can help you minimize losses if those currencies depreciate further. Secondly, diversify your portfolio. We all know that. Don't put all your eggs in one basket. For example, gold can be a good hedge against the dollar's volatility. Historically, it does thrive during times like this when uncertainty is high. Thirdly, focus on regional opportunities. Not everything is doom and gloom. Southeast Asia still has bright spots like domestic consumption and renewable energy. Indonesia's push towards the EV production could attract significant foreign investments. And one bonus tip, keep a close eye on central bank interventions. A surprise move from the Monetary Authority of Singapore, the MAS, or the Bank of Thailand could create very quickly trading opportunities. If you're trading gold or Southeast Asian currencies, this is a time to stay sharp. Markets are volatile, but that's where the biggest opportunities are. Now, I've traded through the global financial crisis, the GFC, in 2008, and I see parallels with what's on the horizon. And remember, this isn't the first time we've seen something like this. Back in 2018, Trump's tariffs caused massive disruptions. Southeast Asian exports contracted and currencies weakened right across the board. 2025 might look similar, but the stakes are even higher now with the post-pandemic vulnerabilities. While Southeast Asian currencies are likely to weaken in 2025, the region's underlying fundamentals remain solid. Investors should balance caution with confidence, leveraging opportunities that rise from the shifting tides of global trade and monetary policy. Now, if you've enjoyed this breakdown, hit that like and subscribe button for more insights. Drop a comment below on what's your trading focus this year. Let's share some ideas and dominate the markets together. Thanks for watching, and I'll see you in the next video.